sure all of you are already aware of the delivery numbers and I don't have to tell you, but wow, this was outstanding. Of course, we knew this was possible, and I'd even done forecasts that came close. Actually, my base case deliveries number I did at the end of November was 307,000 and deliveries were 308,000. But for my latest deliveries estimate, I wound down China as we still didn't have any concrete evidence that Tesla were producing that many vehicles there. We have the numbers now, so let's go through them and see what inferences we can draw. Obviously, we have two numbers, delivery and production. Considering that Tesla were low on inventory and had taken from inventory in Q3 too, it was somewhat assumed that the vehicles produced would be adding to inventory this quarter too. In addition to that, Elon also sent out the email about cost being more important than vehicles delivered. However, we're seeing 3,000 more vehicles delivered than produced. I don't think anyone expected this, which just means that it likely benefit the stock price that much more, as the market doesn't seem to care about production as much as deliveries. From here on in, we'll be only discussing the production numbers, as deliveries are somewhat arbitrary how many vehicles Tesla decide to take from inventory or add to their inventory, which makes deliveries not as a relevant indicator to the success of the company as production numbers are. Now, the Model S and X production, well, I thought this would have been higher. We had 13,000 up from 9,000 in Q3. That's a 44% increase, which may sound high, but this includes the X being added, and I really expected a lot more ramping from the Model S. Not quite sure why they weren't ramped up more. Maybe supply shortages. Alright, the S and X are not the make or break of the company, just icing on the cake. What really happened was what went from 228,000 Model 3s and Ys produced in Q3 up to 293,000, 65,000 additional units, or nearly a 30% jump in production numbers quarter over quarter. This is what we need to analyse. Where did all these extra units come from? Well, that's what we're here to find out. First, let's do what we can to establish which factories these vehicles came out of and try and break down the models as much as possible. We can start by totaling all the deliveries from China, which is a figure we're given. We have October delivery numbers from China at 54,391. November delivery numbers out of China were 52,859. Then we had December, which, as you know, was a number I was particularly looking forward to give more validation on these China production rates. But we saw over 70,000 deliveries, which is something we need to talk about later too, as the production level is rumoured to have hit around 65,000 for December. These are big numbers and need deeper analysis. This took the total for China deliveries for Q4 to almost 178,000. I'd estimated 173,000 for production, and if some of these vehicles came from inventory, well then, that means that I was pretty close with my estimate for China, which means maybe it's Fremont that may be doing better than we all anticipated. Firstly, let's not ignore the fact if Tesla are at a production of 65,000 units a month in Shanghai, then that's an annual rate of 780,000. This alone is huge and requires an episode or several relaying what it means for the rest of the year, the company, and the other factories. Alright then, now this number for China was deliveries, not production, so we'll subtract this from our 3 and Y deliveries number, which was 297,000 minus 178,000, leaves 119,000 3s and Ys delivered from Fremont. Now, as 1% of deliveries were from inventory, we'll use that number to round down the 119,000 deliveries to get the production number, giving us an estimated 3 and Y Fremont production of 118,000, which is where the discrepancy lies. Everyone is looking in the direction of China being the cause of these unexpected numbers, but it's actually Fremont, and I think I know why. Now, I only had 105,000 total 3s and Ys coming out of Fremont in my estimates. I limited it partly because of what some other analysts had told me in regard to bottlenecks with the paint shop. I did, however, say that these numbers could be 10,000 units higher, and I'll tell you why. In Q2, I estimated that Tesla produced around 50,000 Model 3s out of Fremont. However, in Q3, this number dropped to an estimated 40,000 units. It threw my estimated numbers off for the quarter. Why were Model 3 production numbers down so much for Q3? Well, My theory was that they were changing the lines over to allow for the new battery pack they introduced. Tesla moved to LFP for the standard range in Q3, and I believe this might have resulted in some downtime. Therefore, I'd put my Model 3 estimate back up to 50,000 for this quarter, but it would appear that I underestimated this. Well, kind of, as I did say I wouldn't be surprised if there were 10,000 more units. Now, I would estimate we have around 58,000 Model Ys for the quarter, thus leaving 60,000 Model 3s for the quarter from Fremont, up 20,000 from Q3 and up 10,000 from Q2. This is quite the jump, despite an already ramped up facility. So what happened? Well, like I said, they took the line down for LFP batteries. LFP batteries are more abundant than nickel batteries. Fremont was still potentially very much battery constrained. The extra LFP batteries supplied from CATL have somewhat remedied this. This is exactly the reason why we're seeing such impressive ramping up in Shanghai, because Tesla moved over to an LFP Model Y standard range due to the Asian market being accepting of lower range vehicles, as almost all the local Chinese EVs all offer low range. Tesla can get away with it there. This was my theory as to why the Model 3 may increase in production now it uses LFP in the standard version. It would appear I may have been right. I guess as CATL ramp up their battery production, Tesla want to absorb as much of their increased supply as much as they can. It's like Tesla want to buy as many batteries as they can or something. Anyway, I think this is where the discrepancy lies. At least in my numbers, as I was pretty close to production numbers for China. Even despite that amazing 70,000 deliveries in December, I had factored in that pretty close and scaled it down slightly just in case I was being too bullish. So, wow, Fremont is going to do better than we thought too. But then all the latest we are hearing out of China now, a Model Y coming out of the factory every 36 seconds or so, extra shifts being added there. There is going to be a lot of intel we can use from that to draw other inferences, particularly on what we might expect from Berlin now. Alright, now this brought the total deliveries for the year to 936,172. This is up from 499,550 deliveries in 2020, which is an 87% increase in deliveries year over year, which is obviously crazy. Especially when it looks like we might have a similar jump in deliveries this year too. Right, I guess it's time for me to finalise my production estimates for 2022, now we have all this extra information. I know a lot of people were hoping for 1 million deliveries in 2021, but all those estimates that were over 1 million, well, they'd all included the potential of Texas and Berlin to be in production. Tesla very nearly approached 1 million units without these factories. Just Fremont and Shanghai alone. I don't think anyone had estimates that high for just those two factories this year. This means that Tesla have exceeded my expectations on their production capacity. It's just the regulation from Germany mainly letting us down, which we didn't expect to delay things as much as they have. And Texas sounds like it's very close to opening, which should act as another catalyst to the stock price. Anyway, just plugging in these new delivery numbers quickly, we are at $2.5 billion net profit. This is over a 50% increase from Q3. This also comes to an annualized earnings of $10 billion. At an annualized PE ratio of 150, that comes in at $1.5 trillion valuation, or about $1,500 stock price. On top of that, we could have Berlin and Texas opening. We could see the specifications of the new 4680 Model Ys and several other events over the next couple of months. If the momentum really flies, and we don't get any major negative macro events, then perhaps $1,700 is even on the cards. Although, if it did hit that figure, I would guess it would be short-lived, as I'm anticipating a bit of a lull for the most part of the year from here. Unless we're being majorly sandbagged on 4680 production lines in the new factories, which is always a possibility. Which is why I bought some options over this period. There were just too many massive events over one small period. It seemed like any of them needed to hit to boost the stock price. I don't do these trades often, but I do tell you when I do, and I post them on Twitter, so be sure to follow me there. Anyway, thank you to everyone at Tesla and of course Elon Musk for another outstanding year. I'm hoping we see another similar jump in production this year too, but I'm starting to get really excited about my 2022 estimates. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.